Hey everybody, welcome back for another deep dive.
Thanks for having me.
Today we're really diving into this market analysis from Alec Young over at mapsignals.com.
Mm-hmm.
And this is a hot one. It was published today, October 21st, 2024.
Fresh off the presses.
So you guys know we like to go right to the source. And this one is very interesting because Young is calling for a buy right now when a lot of people are very unsure
Yes.
about what to do in the market.
Absolutely.
And he's saying it's all about this idea of big momentum,
Yeah.
which is something that we're going to unpack a little bit.
And what I think is so interesting about his analysis is that it's not just about the numbers, it's about the psychology behind it.
Yes.
And I think that's something that a lot of people don't necessarily always factor into their own
Right.
investment decisions, but he really connects it with the historical trends.
Totally. And speaking of numbers, I mean, let's just throw a couple out there to get everybody, their heads spinning a little bit.
Sure.
The S&P 500 is up 22% since January.
It's amazing.
I mean, that's a big number.
Yeah.
That's huge. And since this bull market began 2 years ago, up 63%.
Wow.
I mean, that's
incredible.
that's got to have some people out there thinking, okay, time to cash out, right?
You would think, right? Like, when do you
stop winning?
when do you take your winnings off the table? Exactly.
so.
But, he suggests kind of taking a deep breath here and looking at the bigger picture a little bit.
Yeah.
And that's where this whole idea of market momentum comes into play.
Okay, so let's unpack that a little bit for people who,
Yeah?
because not everybody spends every day,
Yeah.
staring at the stock charts like we do.
Right. Exactly. Yeah.
What is market momentum and why is it significant in this context?
So essentially, market momentum is the idea that rising stock prices tend to keep rising and falling. Stock prices tend to keep falling.
Okay.
So you can think of it as a snowball rolling downhill.
Okay.
It picks up speed and size as it goes, and it's fueled by investor psychology. It's a little bit of a self-fulfilling prophecy.
Interesting.
If things are good, more people pile in, prices go higher. And historically, when we've seen these periods of really strong, sustained momentum like this,
Yeah.
they've often been followed by further gains.
So Young is saying, don't fight the wave, ride the wave.
Pretty much.
Yeah.
He's saying, look, historically, this is what happens.
Okay.
And he backs it up with data, too, by the way. Going back to 1990, he shows that after the S&P 500 experiences what he calls a top quartile 6-month rally,
Okay.
meaning a surge in the top 25% of all 6-month periods since 1990,
Okay.
it goes on to see an average gain of 13.2% in the following 12 months.
But wow.
And remember how we said that the S&P 500 is up 63% since this bull market began?
Yeah.
Well, within that time frame, we've seen an 18% surge just since April of 2024.
So we're in the top 25%
Oh,
of all time, basically.
yeah, since 1990.
Since 1990, yeah.
But still,
I mean, that's pretty impressive.
that's significant.
That's something.
Yeah.
Of course.
There's
two sides to this coin.
two sides to the story.
We're talking about riding waves and potential gains.
Yeah.
But some people see some storm clouds on the horizon.
Of course, yeah.
So what are the main concerns that Young brings up in his analysis?
Sure. So he brings up the fact that a lot of the bears out there are concerned about the Fed pumping the brakes on interest rate cuts.
Okay.
Which they fear could throw cold water on the stock market growth.
Okay.
And they're also worried about these rising long-term interest rates, which are currently at 4.1%.
Right.
They're worried that that's going to scare away investment.
Right. So those are some pretty big concerns. I mean, those are things that people are definitely talking about and worried about.
For sure.
So is Young just ignoring those problems or,
No. No, he's not.
is he just painting too rosy of a picture here?
Not at all. He actually tackles them head on in his analysis.
Okay.
So
Yeah.
let's start with the interest rate cuts. Because it seems a little counterintuitive, but he's basically saying that historically the stock market's done better when the Fed eases up on those cuts gradually,
Really?
as opposed to slamming on the brakes.
Okay, so why would a slower approach be better?
Well, think about it this way. When the Fed makes these really rapid, drastic cuts,
Yeah.
it can be a sign that something's really wrong,
Right.
It's like they're trying to put out a fire.
Right.
And those sudden moves can kind of make investors nervous. But when they ease up on the cuts slowly and more measuredly,
Right.
it kind of suggests a confidence that the economy can handle a more gradual approach.
Right. It's almost like it signals stability, I
Yeah,
guess,
exactly.
in a way.
Stability, and it can be more reassuring. And he backs this up with the data, too.
That was it.
He says that since 1954, when the Fed has eased slowly, the S&P 500 has seen an average gain of 24% a year later.
Wow. Okay, so slow and steady wins the race, even in the stock market.
Sometimes.
Yeah.
That's wild. Okay.
Sometimes the tortoise beats the hare.
What?
I like it. Okay, so we talked about interest rates and how a more gradual approach to cutting them might actually be a good thing.
Mm-hmm.
But what about the other concern you mentioned?
Yeah.
Those rising long-term interest rates.
Yeah.
A lot of people see those climbing numbers and they just immediately start to get a little nervous.
Yeah. And it's understandable.
So how does Young address that one?
Well, he says it's all about context,
Okay.
understanding why those numbers are moving the way they are.
Okay.
He's saying, yes, rates are up, but he's arguing it's more a sign of economic strength,
Okay.
not this like runaway inflation that some people are worried about.
Okay.
The economy is doing better than expected,
Okay.
which is actually what's pushing those rates up.
Interesting.
And he's also, he did his homework. He went back, he looked at the historical data all the way back to 1955.
Yeah.
And he found that these long-term interest rates, they tend to stabilize around the current inflation levels.
Oh.
So they're not just like, spiking out of control. They're aligning with where things actually are in the economy.
Okay, so what you're saying is we're riding this wave of big momentum.
Yeah.
These things that a lot of people are seeing as red flags might actually be good signs.
They could be. Yeah.
I love it when a scary situation turns out to have like a silver lining to it.
Right.
It's all about perspective.
Exactly.
Yeah. But of course, like we have to acknowledge here, no market analysis can predict the future perfectly.
Of course not.
I'm guessing Young would agree this isn't like a guaranteed bull run or anything.
Right. It's not like he's saying this is a sure thing.
Right.
He's just saying that this is what the historical trends show,
Right.
and this
Yeah.
is what's happened in the past.
And this is what his interpretation of the data is.
Exactly.
So, I mean, it's still good to be,
You always have to be cautious.
Yeah, exactly. You can't just like go all in.
You can't bet the farm quite yet on this, but it's definitely interesting to consider.
Exactly.
So given this nuanced view
Of the market. We've got the potential upside, but we also have to acknowledge there are always risks involved.
always.
Where is Young suggesting investors consider putting their money?
Okay.
What areas look particularly promising in this big momentum environment?
He's really bullish on these things called cyclical sectors.
Okay.
And these are industries that tend to perform well when the overall economy is growing.
So like what kinds of industries are we talking about here?
So think of things like industrials,
Okay.
technology,
Yeah.
particularly areas beyond just the big tech giants,
Okay.
and financials.
Okay, so those are pretty broad sectors. I mean,
They are, yeah.
do they offer any more specific insights within those areas?
Yeah, he does. He connects their potential to that economic resilience
Okay.
that we were talking about, saying, companies in these sectors are actually seeing record earnings right now,
Oh, wow.
which is being fueled by that really strong economic performance that we've been seeing.
Okay, so that's interesting.
And he also mentions that his firm maps signals, that they provide tools
Okay.
to help investors identify specific companies
Right.
that have strong what they call big money support.
Okay. So they're like tracking the institutional investors,
Yeah, basically they're looking at where the big institutions are putting their money.
which can be a pretty good signal, I would imagine.
It can be, yeah.
If you're trying to,
Follow the smart money, as they say.
all the smart money, right? Exactly.
Exactly.
But even with those insights,
Right.
we always have to remember investing always has risks involved.
Always.
Past performance is not a guarantee of future returns.
Never.
Right? We always.
Got to say that exactly.
Disclaimer.
Disclaimer.
Yeah.
But it is interesting food for thought, I think.
Absolutely.
Yeah.
It is. Yeah, no, totally. And it's interesting to think about, like, I'm hearing you talk about this big momentum idea.
Mhm.
And like, I don't spend every day, staring at the stock charts. But even I can hear this and think, it's almost like the market has its own, kind of inertia.
Mhm.
Like it gets moving in one direction and it's like, whoo, whoo.
Yeah.
How do you even stop that?
It's hard to stop. And I think that's exactly why Young is emphasizing, looking beyond just the headlines, looking beyond that like day-to-day market noise and really trying to understand these deeper forces that are at play, like momentum, like investor psychology. That's really what can give you an edge.
Yeah. That's like having X-ray vision into the market or something.
Yeah.
That's so cool. So, okay, we've thrown a lot of information at everybody today. We've talked about this idea of big momentum. We've looked at some historical trends. We've even looked at how some of the things that other people are viewing as red flags could actually be good signs. So I want to throw it back to you listening at home right now. How are you feeling about the market after hearing all of this? Are you more inclined to kind of like ride this wave of momentum?
Mm.
Or are you approaching things with a little bit more caution? I mean, there's no right or wrong answer here, but hopefully this has given you some things to think about, some tools to use as you're navigating your own investment journey.
Absolutely. I think that's a perfect takeaway. Nobody can tell you what the market's going to do. It's really about, empowering yourself with knowledge,
Yes.
with context,
Love it.
so that you can make the best decisions for you.
Yes, knowledge is power. That's what it's all about. So there you have it, another deep dive in the books. As always, we'd love to hear from you guys, so head over to social media. Let us know your thoughts. Let us know how you're feeling about the market. Are you bullish? Are you bearish? Are you somewhere in between? Let's keep this conversation going. We will catch you guys on the next deep dive.